Hey guys, this is Nick from Financially Aware, and in this video I want to talk about the Hertz bankruptcy filing on Friday night and two things about that. One, what is going to happen to Hertz the company? Are they going to keep operating? Are they going to have to liquidate their fleet of cars? And if they do, what's going to happen to the used car market and the used car prices because of that? And number two, I want to talk about the Hertz stock itself and what has already happened to the Hertz stock price in after hours and what's most likely to happen to the Hertz stock from this bankruptcy filing going forward. So all you people that have been buying Hertz stock, I think you should check out what's really going to happen to Hertz stock from this bankruptcy. So in this bankruptcy filing report here, Bloomberg states that they listed 25.8 billion in assets and 24.4 billion of debts. And they have $1 billion in cash. So they don't need the debtor in possession financing. They have some cash on hand. So what that means is they're going to continue operating while they go to court and try to negotiate with their lenders to come up with some kind of deal, which means, let's say they have $25 billion in debt. If they make a deal to pay off 90% of that or 70% of that or something like that, then each lender gets 70 cents on the dollar or something along that line. However, not all the debts are the same. So the debt that is the collateralized debt for their cars, over 500,000 cars that they have, that's separate, and the collateral for that debt are those cars. So if the bondholders for that debt decide that they don't like the deal, they can make Hertz liquidate the cars and try to get back some of their money. Now they're going to lose a portion of it doing that, especially if they dump too much of it too quickly, but that's one way that they can get back their money. And normally car rental companies have deals with the manufacturers, buyback deals, where the manufacturers kind of lease the cars to them and charge them a kind of a depreciation every month off the original price. And Hertz or any car company can sell back the cars to the manufacturers after any amount of months that they want. But in this case, Hertz has about 400,000 cars that do not have a sellback deal. And not only that, but their deal with the bondholders who hold the debt for these cars is that if the used car market goes lower, then Hertz owes more on those bonds because of that, because the collateral is worth less than originally planned for. So the lower used car prices is actually hurting Hertz even more, so to speak. So what will happen in kind of a worst case scenario where the lenders insist that they sell off the cars? Well, that's already been talked about here in this article. And like they say that the Hertz lease obligations have increased as the values of the vehicles declined because of the pandemic. In an attempt to appease the creditors, they already proposed selling more than 30,000 cars a month through the end of the year to raise around $5 billion. So let's say that happened. I mean, obviously, they're not going to sell 500,000 cars in 1 month. They're going to sell them gradually. So even if they did that 30,000 cars a month, does that mean that used car prices are going to drop 20-30% and you're going to be able to go pick up a car that was $10,000, 2 months ago now for $7,000 or $6,000? Most likely not. And the reason why is that the used car market is really big. Okay, so here's a chart of new vehicle sales and used vehicle sales. And this is 2018. And you see new cars are 17.2 million, used cars are 40.2 million. So assuming that the 2020 used car sales rate is similar, not accounting for the pandemic months, 1 or 2 months, if it bounces back to the same kind of rate, you're talking 3.3 million cars per sale per month in the used car market is the average normal kind of rate in the US. So if Hertz dumped an extra 30,000 cars onto a market that's already 3.3 million, it could drop the market a little bit. It's not going to drop it 20% or 30% or 40% or anything like that. So for the people that thought that something like this is going to give them huge bargains, it's most likely not. And already we're seeing articles like this one dated May 20th that used vehicle prices are up 5.7% in May. And this is from Manheim, the big auction house. So there's definitely been an improvement from the lows of April, which were, huge down month. And even here they're saying that Memorial Day weekend may be a great time to buy a car, of course. And Edmunds is actually saying that they think there's going to be deals on 2019 models with discounts of 17% on trucks, 14% on SUVs, and 16% on subcompacts, and even for 2020 models, 13%, 11%, and 13.5% respectively. So they say this. From what I've seen, I haven't seen any actual new car prices coming down. They're just offering better terms, 0% financing for a long time. But apparently, some actual prices are going to come down. We'll see. I don't know about that. But so basically what I'm saying is, from the Hertz deal, the bankruptcy deal, even if they dumped cars, it's not going to have a huge effect on the used car market. But other things could have a huge effect on the car market, like 30 million people out of work and that kind of thing. So Hertz itself is not going to be a big factor in used car prices or new car prices. That doesn't mean that they aren't going to dip in the future, but Hertz itself is not going to be the cause of it. So now let's talk about the Hertz stock itself and what's going on with the stock. And here is the after hours stock price for Hertz. And it fell from around $2.80 to as low as about $1.40 and ended somewhere around $1.50, $1.60. At these prices, the market cap for Hertz is about $200 million, which is a drop in the bucket compared to the debt they have. But anyway, what do you do if you're a holder of Hertz stock, and what's going to happen to Hertz stock in the future? Should you be optimistic because they're still going to be operating and maybe they'll cut a deal and everything will work out and Hertz will continue to rent cars and stuff? Yeah, that could happen. But what won't happen is that there will still be Hertz shareholders that are the current shareholders, because what usually happens in bankruptcy is that the debtors, if they're not paid off 100% of the money they're owed, sometimes they exchange some debt for stock. So what they do is say, okay, we'll take over all the assets of the company and we'll reissue new stock and give it all to the bondholders, and the old shareholders get nothing. That stock gets ripped up, and that's why Hertz stock is so cheap, because the cheaper it goes, the more likely the market is kind of voting that the more likely that it's going to be worth zero in a bankruptcy. And so you see this news on the after hours, the stock fell like 46%. That's saying there's a 46% more chance that this stock is going to zero. And so a lot of people don't understand that. and think that they're getting a bargain. So if you like that at $2.80, you got to love it at $1.50, right? No, it doesn't. It doesn't work that way. The cheaper it goes, the more likely it is to be a zero if it comes out of bankruptcy. And so this is kind of one lesson for bankrupt stocks and for cheap stocks. And for all you people that are on message boards and Wall Street Bets and Robinhood and other forums, take a look at this in terms of, groupthink. This is Hertz stock, and this green line is Robinhood users, how many of them have a position in the stock. And you see, going back, all of this time here, that nobody had more than I don't know, 1,000 people had positions in the stock. But once the stock started dropping from 20 down to 5, 6, whatever, the amount of users that hold a position in Hertz has shot up to about 45,000. And so all of these small traders are piling in because it's a cheap stock, and they think that, hey, it's $2. If it goes to $4, I'll make 100% of my money. So that's kind of the mentality, and that usually doesn't work out, because usually cheap stocks are cheap for a reason, and most people don't realize that, and so they just look at the price and think that a small move up is a big percentage gain. And so that's what attracts them, as well as all the hype about it. When a stock goes down so much, a lot of people start noticing because they're always looking for a rebound. And add to that all the people that have been staying in their house for the last 2 months and opening brokerage accounts and free trading on all these apps. It's a recipe for a real classic case of herd mentality here, just buying this thing up as it goes and melts down to near zero. And zero is most likely going to be the final spot for the Hertz stock. So that's my take on Hertz the company and Hertz the stock. And if you are a stockholder, you have a decision to make on Tuesday on what you're going to do now that you just lost 40% or so of your money over the weekend. So that's my video on Hertz bankruptcy and the stock and what effect it could have on the used car market. If you like this video, please give me a thumbs up. Leave me a comment if you think on the money, or if you think I'm way off in terms of the used car prices and the Hertz stock. And if you haven't done so already, please subscribe to my channel. Thanks for watching.